Hello, I hope you guys doing good and welcome to this special webinar on how to trade with the MT4 and to get up to speed quickly. Effectively, after about half an hour with me, you'll know what you need to know about the MT4, how to place trades, and that's what we're going to be covering today. Now, if you could please just confirm in the question box or in the chat if you can hear my voice and also see my screen. Good, just got a confirmation here. Thank you so much, sir. All right, good. All right, so we're gonna do this. All right, so my name is Alejandro Zambrano, and I'm the Chief Market Strategist at AtFX UK, which is an FCA regulated broker. I'm also the chief editor of the website investingcube.com, which is an independent website where we produce market analysis. You have my email there. You also have my Twitter handle. I will send you my email on the chat now if you want to get hold of me. There you go. So you don't have to write it down yourselves. It should be in the chat now. As well, we do have, we offer as well free consultation. So if you have to leave early or so, you needed some extra help, or you don't think that this webinar is really helping you, then there's another link there that you can book a 15-minute consultation with me. We get on the phone and I will try to help you to the best of my abilities. Okay, good. Now, before we start, as always, I need to stress that trading financial markets, unfortunately, is high risk. And the broker I represent, AtFX, 75.12% of their retail traders lose money when they trade CFDs or spread betting with them. And it's because of the leverage. When people trade with leverage, which I'm going to show you how that works, you can either make a lot of money quickly, but you can also lose a lot of money quickly. And it's really important you understand that. As well, I'm producing this market content. I'm the chief market strategist, and we're doing this with an educational information and general educational purpose. So I'm not going to be giving you buy or sell recommendations because I'm not regulated to do so, but I am allowed to share my view on the market. But the markets themselves are a bit random many times. And the reason for this is that it's humans that are behind the decisions. And we humans have a very special relationship to money. We really want more of it, and we really don't want to lose it all. Anybody that does any sort of investment or any sort of gambling at all, or anything that has to do with money, you know that when money gets involved, rational thinking goes out the window sometimes, and people do a lot of silly stuff when they're losing money, and as well they do a lot of silly stuff when they lose money. And that is what creates an uncertainty in the markets, and that as well is the reason why people lose money. Because, for example, if you want to do something, you want to do cement or something like that, you just need to mix the right ingredients. If you want to do pancakes, for example, you just need to mix the right ingredients. And most of the time, you're going to get a decent pancake. Maybe not the first time, but maybe the second time. With trading, you might be a PhD, you might have studied for a long, long time, but it doesn't necessarily mean that you're going to have success. And that is the tricky thing with trading. All right, good. Why do traders choose the MT4 platform? Can we give you a quick tour of it? Yes, we can. How can you find the different assets if you want to trade? And how do we open a trade? How do stop loss orders and take profit orders work? How to set your charts? And then by the end of the presentation, and again, can share with you guys a simple yet effective trading strategy. Now, I'm going to be using the MT4 trading platform today. And if you want to follow along, tag along, or try this afterwards, you just need to download it. And it's actually quite straightforward. Here, let's see if I can find it. On the AtFX website, you just click here on create demo account. So go to atfx.com. And depending on where you are in the world, you're going to land on, sort of the version that makes the most sense. But most of them have all the same button here. In the chat right now as well, I'll send you a link to that one. The link I sent to you goes to the FCA entity. Now, why should you listen to me then? Well, I'm the AtFX Global Chief Market Strategist. I also lead the team, as I said, at Investing Cube. More importantly here, I have been trading since 2006. So I have a wealth of information and experience. I've done a lot of mistakes and won a lot of money, made a lot of money, and lost also a lot of money. So I have a wealth of experience. Professionally, I started to work as an analyst in 2009 for a company called FXCM. Started out like a junior analyst and then quickly became the head of the team and was there for many years. And then I went to another broker called Amana Capital and I was the head of that team for about 2 years. And now I've been with AtFX for about 2 years. So who are AtFX then? AtFX are an FCA regulated broker. Whenever you decide to trade with a broker, it's good to see if they are regulated. Now, they're FCA regulated, which means they're regulated by the regulator in the UK, in England. And the English regulators have the longest experience of regulating firms like AtFX, far more experience than the European ones, Cyprus one, and the American ones. And that's good. As well, they have different rules that these brokers need to adhere. One of them, for example, is to warn you in the beginning of a presentation that you can lose money. But the other thing as well, that your money has to be segregated. So when you deposit money with a broker like AtFX, and by the way, it is free to open an account with AtFX, both a demo and a real account, and it doesn't cost anything to deposit money or withdraw money from them. It's effectively no cost at all to use them, to open the account. Now, the benefit is that any money you would send to them are separated from the company money. As far as I remember correctly, American companies don't enjoy that. So American clients don't enjoy that. So if, for example, your broker, an American broker, would go bust, then there's always a risk that your trading money could end up to pay whoever the broker owns money to. What else? You can trade currencies with them, commodities, indices, cryptocurrencies, and shares. What makes them different then? Well, what makes them different is that they provide premium education. So they provide education via Investing Cube, also Trading Central signals. They also provide coaching. So you got a question here. How do the spreads compare with other brokers? They are actually better than the average broker, especially in pound pairs. So if you want to trade GBP pound, if you want to trade pound dollar, they're actually much better than many other brokers, and in particular in the crosses. Because what happens is that brokers will many times have very good pricing on the big products, Euro USD, German DAX, maybe gold. But then as soon as you try to go a little bit different, like Euro Yen, for example, or Pound Yen, which is really popular in the UK, then suddenly you need to start to pay an arm and a leg for that. Here, they have actually very tight spreads across the boards. And also to give you another idea, they have different tiers of accounts. So obviously, if you start with £500, which is the minimum amount, then you're gonna get a rather standard basic spreads. You won't get all the extra, well, you will get the education, but you won't get the coaching. And then they have another one, which is called the Edge, which is the minimum deposit of 5,000. And then they have something called a premium account, which is for 10,000. Now, to get the spreads you're getting on the premium account with other brokers, like the one I used to work with before, you need to deposit 25,000. So you're getting something that used to be 25,000 and many times is still at 25,000 with other brokers, which is 10,000 here. And that's just a deposit, guys. It's not actual, it doesn't cost anything. It's just the deposit. And nobody says as well that you need to trade with all the money, but it's just a way to unlock those spreads. Okay, let's dig in actually. Here, by the way, is a little bit about the coaching. We can talk more about that later. Coaching. So what you do is you get 2 sessions with me, 2 hours each, 1 hour each, where we can sit down and talk just one-to-one. We also have the premium course. So whatever I picked up since 2006, I teach. And from 2006, and I did this version of the course last year. So what you get is 2 complete strategies, and the one I'm actually using right now, plus money management, and also some of the basics as well, if you are unfamiliar with trading in general. They also give these trading signals, trade signals via a company called Trading Central, which is an FC, which is a French regulated asset manager, and they're allowed to provide advice within the EU. All right, good. All right, let's keep going then. Let's load the MT4. All right, so this is the MT4, and a lot of people, when they look at this from the beginning, they think, oh my gosh, there's too much going on. But there's not too much going on if you know, if you realize that all of this is pretty much the same. So to begin with, let's just give you a broad overview. This is just the chart section of the MT4. Most retail traders, but also institutional and big traders, they will usually look at the price of the asset to get an idea if they're going to be buying and selling. The more short term you are, the more important are the charts. The more long term you are, and the more you're into fundamentals and things, the less important the charts are. So this is the first thing here. Now, this is what we call the market watch section, and the market watch section simply lists all the different assets. So for example, let's keep it super simple. This is the name for gold. So this is gold prices. If you want to sell, if you want to buy, and the spread is the difference between the ask and the bid price, and that's what you pay when you trade with AtFX. It's very straightforward. AtFX buys gold at one level, and then they sell it to you at a slightly higher level, and that's how they make the money. So it's very similar when you go to the supermarket. You know, you want to buy a pint of milk. You know, the supermarket probably bought it at a slightly lower price, and then you're paying it, and that's how they make the money. That's the spread. It's the same thing here. So this is just for gold, that little line there. This little line is for the Spanish stock market, Euro Stocks 50, French stock market, German stock market. There's a ton of these different stock market indices, like the Americans ones. You have all the different currencies, like Aussie dollar CAD, Aussie dollar Swissy, all the different combinations. Now, you might find this overwhelming at the start. So what you can do, you can actually right click. So you right click with your mouse, and then if you want to, you can just click on hide all. That what happens there is it's going to close most of the different instruments. Then if you want to, if you do want to see all instruments, you click on show all, and if you want to tailor it for your benefit, you can just click on symbols. When you click on symbols, you can see that there are different groups here. You have the currencies here, and then in group 2 you have the indices. If you want to trade shares with AtFX, you would need to trade with a CFD account. And here, you know, if you don't want all the combinations, there's no reason for you to have them there. You can actually just hide all the individual combinations if you wanted to. But what I'm going to do is I'm actually going to show everything. Again, there's different ways of doing this. You can just right click and you need to click on hide all, sorry, show all. Sometimes when you download a demo account from AtFX, what's going to happen is that you're going to see some of the markers are grayed out. That's just because those specific combinations are not available for us specifically or for you specifically. Maybe because you're in a different region. So for example, the platform is the same if you're based in China, in Hong Kong, for example, and Europe. But what happens is sometimes you're going to see certain things here that are not, they're just, for example, for Far East or maybe just for Europe. For example, non-UK people can't trade with the one where it says bot.sb. So what's going to happen is that's going to be a bit grayed out. And what you can do then is you can just hide that one and then just load the ones that you can trade. And the easiest way to find that out is just to click on show all when you land here. This is what we call the navigator. And again, it's not really complicated. The first thing is there's actually just 4 different sections here. First is the account. Here it's just like in my case, I have a demo account here that I use for these webinars, and you can see my name, account number. You can change here. You can add more than one account. So if you have other accounts, you can add them here, and you can just click on the buttons here, and that will interchange between the accounts. Here is what we call indicators. Indicators are just tools to help you sort of understand better the pricing here. Not everybody uses them. I don't really use them too often, but you can use them. At the simplest, for example, we're going to take one, we're going to go for trend, moving average, just going to drop it here. And then this is just a moving average. So here's, this is 14, and it gives you the color, you got the different methods and stuff. So what is this? This is just going to give you the average price over the last 14 of these candles. If we make it simpler, this is the 14-day moving average. Why? Because this is D1. D1, day 1 day, W1, 1 week, month. H4 is for 4 hour, H1, 1 hour, M3, 30 minutes, M15, 15 minutes, M5, 5 minutes, and M1, 1 minute. Because what's happened here, what you're looking at here right now is what we call a candlestick chart. And it's the normal, that's the most popular way of trading. You have different chart formats up here, but most people stick with the candlestick. What's the candlestick then? So you can see this is the latest price for this asset, which is the Australian dollar, sorry, the dollar versus the Japanese yen, and it's trading at 104.58. Okay, that's the current price. Now, the highest price for today is this level up here, which is 105.17. The lowest price so far today is 104.51, and the market open here at 104.93. So this is what a candlestick does. It's going to show you the highest price of the day, the lowest price of the day, and if the market and where the market opened. Because the price is lower, you will get this black candlestick. If the market would have gone up, you get this hollow or white candlestick. There are different functions here. If you right click and then click on properties, you can have the different color schemes. So the different combinations here. I'm just using the default here, which is black and white. So that's the candlestick. Now, I said before, this is the indicator. That was set on 14 periods. If you ever want to change that, you can just right click and then you click on indicator list. Here, you will find it and you can see, you can click on it, you click on edit, and then you can change it. So if I would click this to 10, and because I'm on the 10 D1 for daily, it's just going to show me the average price for the last 10 days. So the last price of the last 10 days is 105.75. And people like to use this indicator to sort of get them a better idea if they should be buying or selling. Now, this presentation here specifically isn't related to how to buy and when to sell, how to trade. It's more about how to use the platform. We will, however, by the end of this presentation, show you a quick strategy. And if you are genuinely more interested in strategies, so when to buy and when to sell, then you do get that free course with the AtFX. It's a course that before I joined AtFX, I used to sell tickets for that, and they were £1,000 each, these tickets. But you get this for free. And instead, what happens is that the AtFX pays me, so you don't have to pay. Okay, so let's take a look at this now then, the other sections. This is the trade terminal. If you open any trades, it's gonna show here. It's also gonna show you here, you can see the balance, so that's how much money this account has. Because I don't have any positions open, all the numbers are the same. If I do open a position, they will change. And then you have what we call account history. So account history will just show you the positions you've done in the past. Effectively, these are the two tabs you're going to be using. There's other tabs here like news, things like that, but people don't really use them at all. There's even like a marketplace function here. Let me just see here. I clicked on marketplace and now it's loading and I think it's got stuck. There we go, we're back. All right, so I'm going to show you how to trade. Do you guys have any preferential markets that you would like me to trade? Alistair, Michael, Parag, Rob, or anybody else? Okay, NASDAQ 100. Let's load the NASDAQ 100. Okay, so the NASDAQ 100 is called the US 100. Okay, and the reason for this is that we're trading a CFD of it. We're not actually trading on the exchange, right? We're not linking directly to the Nasdaq exchange. If you would do that, you would need to have like a futures trading account, which is something different. It's offered in America. The problem with that is that usually the margin requirements are really, really high. So what happens is that in rest of the world, people trade via a broker like AtFX. And what happens is that AtFX has the connection. So when you trade, that order is sent to the exchange. However, because a company like AtFX has many clients, they will effectively bundle up all the orders, send them to the market, and effectively uh, they deal with the margin, they deal with the commissions and all of that stuff. And in the case of the UK, you would even not even pay tax on that. All right, so this is the Nasdaq 100. Nasdaq 100 is at a very, very sensitive level. Nasdaq 100 is just about to trade below the lows here from last week in the September lows. That level is 10,918. Now we can do several things here. A lot of people, they like to look at the price action. So they will look at the candles as before. They will look at the different lines here and things like that and use that to determine. All right, so we're not gonna do anything fancy like that. I'm just gonna show you how to trade. So the simplest thing, we wanna be a buyer right now, all right? And here, I just double click. Now, because this is a spread betting account, it's actually gonna, I can put the amount that every change, so every change in 10,000, so if this goes from 10,968, 67 to 68, if I put 1 here, I'm gonna make £1. If it's less, if it goes down, I'm gonna lose £1. With many other brokers, like or even with AtFX, when you're trading with a CFD account, you're actually choosing the amount of contracts that you buy, which is a bit different. Without getting too complicated, and because the systems are a bit different, again, the best thing to do is just to play around with the demo. If you're in England, most people just go with the spread betting because you don't pay taxes on any winnings. As well, you don't get any tax deductions if you are losing. But if you're non-UK and non-Irish, then you can't choose spread betting accounts. You can only choose CFDs. And this is not unique to AtFX. It's just the way the law is written. And you will trade with the CFD. All right, so we're just gonna do a test here. So I can buy, if I buy here and the price goes up, I will make money when the price goes up. If the index goes down, I'm gonna lose money, all right? Now, with the CFD, you can actually make money, or a spread bet, you can make money on price going up and on the price going down. So for example, the price is just here 10,967. If I think like this, all right, US election is coming up in about 50, 60 days, and I think COVID-19 is gonna come back. You have the problems with Brexit and the EU and everything as well. And just in general, I think that Tesla is a company that is overvalued, and Apple as well. If you think like that, you can just click on sell and you're gonna sell, and you will sell here. And if the market indeed goes down, you will make money there. This is what we call short selling. I'm not gonna go into the mechanics of it. All you need to remember now is if you click on sell, you're short selling and you can make money on the price going down. But we're gonna try to buy now. So I'm just gonna hit buy. I just bought here, and then you can see here, this is the order number, and it says I bought for 1. Now, here you can see that immediately it went to a bit of profit, but actually it started with a bit of a loss. Why does it start with a loss? Because as I said before, you have to pay the spread. So the broker like AtFX, they will buy the Nasdaq 100 on one level, which is slightly below where you are gonna buy it. But you see the market here, the spread is so low that just after a few minutes here, not even a minute, I think, after a few seconds, we're already making money. It also has to do with the fact that we're buying at support and the things going up. But the key point here is that the cost of trading any financial market in general is extremely low. And that is why people are going to go in and out, in and out, in and out. All right, so we're making a bit of money here. We just made enough to buy a lunch. Let's hit that close button. So if I want to close here, I can click here there we go. Account history, a profit of 7.9 after trading this trade. Right, we can try to do it again just to show you. All right, I want to make money on a rise. I double click here and I put the volume in. What I'm going to do now as well is I'm going to add a stop loss. A stop loss is just a level which is a level that gets me out at a predefined level. So for example, I can buy now. Let's buy now again. So I bought here again. Now you can see that the price bounced here on September 8th and it bounced here on September 11th. And now we're back at the same level again. Normally, when the price trades below support, the market can go lower. But you can also look at differently. For example, imagine you have a friend, right? Your friend wants to borrow money from you. If you ever been to university, you know that there's always one guy that likes to spend all his money on just having fun, and then uh, like 1 week before you get any funding or whatever, they will ask you for money, right? So you would lend money to them, right? You would lend whatever they need. It's usually smaller amounts, right? And then the guy says he's gonna pay you after 2 weeks. You get your money back, he pays you, and then same thing happens the month afterwards. But that time he doesn't pay back. So you're getting a bit worried. And then after a few more weeks, he comes back and wants to borrow more money. You might potentially lend him more money again because you're a nice guy, but there's gonna come a point where you say, "Oh, this is enough. I'm not gonna give you more money because I'm not getting anything back." Maybe it's not the best analogy, but it's a little bit the same here. When you do any sort of investment, even if like this, even if you buy a property, say you buy a property and you buy a property at $100,000. It's a 1 bedroom flat somewhere. And you think this is gonna go up, but ultimately, maybe they open a bar just next to your place, and suddenly this flat is you can't get 100,000 for it anymore. Now you just get 60,000 for it, and at the same time, it's gonna open more bars just where you live. So the likelihood that you're gonna be able to sell it at a higher price is really low. So what do? You take a loss on that. It's a little bit the same. And more, hey guys, so sorry about that. I lost my batteries, so it should be okay now. I hope it wasn't for too long. Thank you so much for letting me know in the chat. Okay, good. So what I said before is that you can put a stop loss in the system. So the idea here is question forward. We bought at 10,978. You see stop loss is 0 and take profits is 0. If you just either right click on the line which shows the open position, you can click on modify. You could also just double click down here. If you double click here, then you can put whatever level you want, but usually we click on copy like that, and then we put the level. So we want to put the stop loss at 10,860, which is just below this level. And what happens here is we got two lines because I did two things. But you see here to the far left, it says SL, which stands for stop loss. So we're up with 33 bucks right now, 33 pounds. But if the market comes down, it's tumbling, and it goes all the way down here, the system will automatically close out. And you can also see here that I'm standing to lose 118.40 pounds on this price sliding lower. This is great because, you know, if I want to walk away now, I want to focus on some other things, or, you know, need to walk my dog or whatever, then this system is going to be here. I can close this, I can close the PC, and I can walk away. Now, there's a whole science on where to put the stop loss, and that comes to trading strategy, which again is covered in that premium course. Then we have what we call TP. TP stands for take profit. So for example, you know, I bought here. The TP now is up here, but I can drag it. I can drag and drop it. I can put it whatever I want. So right now it's at this level, and my TP here is at 62. So sorry, not at 62. The actual level is you can see it here is 11,041. And if it comes up here, I'm gonna make 62 pounds on this. I can lower it now just to show how it works. So I'm gonna put it here, and hopefully it's gonna click. So if it just goes up, all of this is gonna be gone by itself. And see if it attacks, you see? No, it almost, when it's about to reach, it goes green, you see? So now that was out. We just made 42 pounds and 40 cents on this. In total, 50 pounds here since the first trade. First trade happened 8 minutes ago, actually, 8 minutes ago. That's when we did the first trade. Now you see the allure of trading, right? You can make money quickly, but why am I making money quickly here? Well, I'm not even making money there because this is a demo account. But the reason why I'm getting it right is because I've been doing this for a good number of years. Now, there's something else I wanted to show you. When you open a position, so I'm gonna buy a bit more here. So when under the trade tab, you see I can just see the money I have, right? If I click on buy, you can see that the numbers are now changing. You can see that the balance is the balance. The balance is not gonna change until the trade has been closed. So until the trade has been closed, the balance is gonna remain unchanged. The current floating one, the balance plus whatever profit or loss I have is equity. This is what you have here, okay? And if I close now with this 16% loss, obviously this is gonna be set less than that. Now this is what we call the margin. Some people say, what's a margin then? Margin is actually quite straightforward. When you buy a property, say you wanna buy that flat again, new location, $100,000. Do you have to go with $100,000 in your pocket? If you live in the Western world, no. You can go to your bank and say, look, I have $20,000 and I want to buy something for 100. They will usually say yes, because you have a 20% deposit. The deposit is the same as margin. Okay, so when you buy a house, you put the 20 down as a deposit, and you can suddenly control you get the flat, which costs 100,000. So the 20,000 is the margin. It's the same thing here. Now, because we are in a spread betting account, the situation here is a little bit different to calculate. But long story short, this is the margin. I'm holding a position that is relatively big, I guess, and I had to set aside 521.84 pounds to open this position. When this position is being closed, I get that money back. Now, the margin requirement for something like the NASDAQ 100 is 20% or 20 times. So I'm gonna be a little bit complicated here. I hope you're okay with mathematics. So that is the margin. If I multiply that by 20, this is what I bought. I bought the actual position here is for a total of 11,020 pounds. That's what I bought for. So I can click again here just to give you an idea. This is what we call one-click trading, by the way. You need to be careful with this one in the beginning. On a demo account, do whatever you want. What the demo click trading is, you just click here. What happens here is that it will automatically, you just click once and it's going to open the position. So if I click again here, you see it opened a new position. So I have two positions on right now. Now you can see that my margin is 11,000 and also 1,202. So if I take this margin and then multiply that by 20, I'm controlling a position now that is worth 22,040 pounds. But in my account, in my balance, you can see I only have 11,141. Why? Because brokers like AtFX are lending you the difference. So they're like your bank. And this is what we call margin trading. And because you can hold positions that are bigger than your account, that's how you can win a lot, but you can also lose a lot. But this is the thing. Nobody's forcing me to trade with two positions here. I was holding one position at first, right? And actually, if I want to, I can buy with less. I can put 0.5. Look, if I pump 0.5, you can see now that I have one position for 0.5. If I would close everything out, then this, let's do it. So closing everything out. So I only use 275 here in margin. So 275 multiplied by 20. I'm holding a position now for 5,550. And this is great because that's about half of what I have in this trading account. When is this good? If the market is moving a lot, so if the market is effectively, if this market goes down with 10%, which is a lot, because I'm just holding half, I will only lose 5. At the same time, if it goes up with 10, I'm only going to make 5. And you control this with this. Now, in the world of currency trading, people love leverage because currencies don't actually move that much. You might think that the Euro USD, this is the world's most popular currency pair, it might look like it moves a lot, but it doesn't. It doesn't move too much. In fact, if you look here, since 1st of August, is stuck in a range of what we call, what is this? 300 pip. This is what we call 300 pip. I'm using this little line here, this crosshair to get an idea. So the thing is this though, I can choose. So this is 300 pip. If I buy here and close here, that's 300 pip. Now, if I put 1 and I bought here and it went up, I would have made 300 pounds, right? If I put 0.5, I would have made 150 pounds. But if I put 10, I would have made 3,000, okay? So can I buy for 10,000? Let's give that a try. I have 11,000 in my account. Let's see if I can do this. I could. All right, so the margin here is 3,929. So the margin requirements, because currencies move less, you can see it only moved with about 300. Okay, so let's make it simple. 120 over 1.17. This is 120 here, this is 117. 120 and 117. The actual price change since August in the Euro USD has only been 2.5%. But because of the leverage, I can make more than what's actually being on offer. with currency trading, the maximum I can trade is with 30 times in something like the Euro USD. Okay, so if I have 11,087 pounds on my account, the maximum I can buy is for 30. So I can actually, with just 11,000, I can hold a position for 331,000 pounds. That's the maximum leverage. Of course, if I open a position with that leverage, what's going to happen is that I'm either going to make money really quickly or I'm going to lose everything. And that's why it's not recommended to trade with such high leverage. Okay, good. So another little thing here, by the way. So you have the margin, that's the deposit. You get that back when you close the position. This is the free margin. The free margin tells you how much money you have available to open another position. Okay. All right, so we covered quite a bit of information here. Let's see, I'm gonna cover that strategy. Just wanna see if there's any question. Is CFD lower margin than spread bet trading? So the CFD leverage and margin requirements are the same for CFDs and spread bets. It's no difference at all. The difference is though that in the CFD trading account, you say, I want to buy one contract of the NASDAQ. I want to buy half a contract of the NASDAQ. I want to buy a tenth. I want to buy a quarter percent of the NASDAQ, or multiples of all of this I just mentioned. In the case of the spread betting, you don't say how much you want to buy. You say how much the price change is going to be worth. So how much pip is going to be worth. In this case, I put 10 here. So I put 10. That means that for every pip, the pip is the fourth decimal, is this here. So you see, it's 117.99. If this goes up with one single number, I'm gonna make 10 pounds. If it goes down with one single number, I'm gonna lose 10 pounds. Okay, that's the pip, and that's the difference with for betting. Okay, let's take a look now at an actual strategy. All right, this is a very simple strategy, and there's some people that says that, you know, the different approaches to trading. Now, this is a simple strategy, and it's a pattern, okay? It's a pattern, and if you can just learn to recognize this pattern, it can make wonders in anybody's trading. I trade primarily with patterns. Now, this is what we call a rectangle pattern. Imagine that the price starts here on day 1. On day 2, it comes here. On day 3, it comes down again. On day 4, it goes up. On day 5, it goes down. On day 6, it goes up. And on day 7, it comes down. Now, imagine that this is 90 and this is 100. Now, the price is stuck what we call in a range. So people bought at 90 here, 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 and here. And they sold at 100 here, here, and here. So what happens if we have a breakout? All right. If the price trades below it, normally the difference between the high point and the low point of the pattern is going to be the target. So if this is 90 and this is 100, then the difference is 10. You can assume that if we trade to the upside, we're going to go up with 10. And if we trade to the downside, we're going to come down with 10. That's the beauty of this. It will give you exact levels of the price target. Now, why would people sell here? Usually the market goes into a sideways pattern when people don't have a strong opinion about the asset. When people don't really know if they should be buying or selling, the price starts to trade sideways. Now, what's gonna shift and cause people to break out from this triangle? It's usually some fundamental piece of news. So something happened, and that causes people to sell, or it causes people to buy. Not always, though, do we actually know when, and not always do we get like a breaking news notification that tells us that this happened and we can trade. In fact, many times we don't get anything. We just find out afterwards why people bought and sold. But you can look at it like this. If we buy here and then it goes up a bit and then it comes down, then we're gonna be losing money. People that bought before us will be losing money, and people that bought before us would also lose money. So all these people are gonna be under panic now and say, what's going on? I bought at 90, the thing is now at 88, and I bought for a lot of money, so I'm down with 500 pounds, 1,000 pounds, whatever. People get a bit upset. What do? They look at the news. Is there anything here that tells me why the market is the way is up or down? And they don't find nothing. They say, okay, let's just get out of this. So they start to get out. Or if they have a stop loss, the stop loss is going to get them out. And what happens is that usually around these levels, you have many levels, a lot of stop loss orders. So you get a cascading effect. One guy sells, which pushes down the price and hits the stop loss of the other guy, which hits the other guy and hits the other guy. So you get a cascading effect, right? And this is actually a phenomenon that you can actually, has been studied. And at the same time, people that maybe thought that the price was going to come down, they will usually buy when the price breaks to the upside because they have orders to be betting on this to come down. So let's actually take a look at the NASDAQ, because the NASDAQ 100 is actually in a triangle situation or rectangle situation. So we're going to load that one. By the way, if you don't just have to have one chart, you can actually right click and then click on add chart window. Now, what's interesting here, by the way, is that I have modified this one. If you ever want to, because if you load the charts, they're going to look a bit different. So again, you click on properties, and then you can alter them the way you want. And then when you're ready, you click on save, and then on the templates, you click on save template. And on save template, you should just save it as default. If you save it as default, or if you don't see default, just write default. And what's going to happen there is that every time you open a chart, it's going to look the way you want it to. So I'm going to, well, actually, I already have one open here. Let's select this then. Let's go back to the Euro USD and see if I can find it. The only thing sometimes which can be a bit frustrating is that things are organized a bit differently from broker to broker. All right, so I just right clicked and now I have a Euro USD chart open. In fact, I have it here already. So you see, I have tabs now. You see tabs? If you want to, you can just click the button up here and it will rearrange. And you can have up to 10, 15 charts, but you're not going to see too many at that time. So you can do that. And then down here, there are different profiles. If you click on this one, you can create different profiles. So you can have a profile with just certain numbers of things that you like, certain markets, and back and forward. All right, I promise you I was going to show you a pattern here. All right, so this is quite interesting. So you see here, this is support, support, support. And then if you put a line here, you can see you have resistance, resistance, resistance. So you have that pattern I told you about. We've been trading sideways here since September 7th. So with the help of this information, we can create a strategy. Difference between the low and the high is, and you see it says 13. 13 just means how many bars that way we're going. And then you have the other thing, which is 6,545. Now the actual difference here is not that big. The actual difference is about, what is this? It should be about 600 points. So we don't have to complicate it too much. It's 6,500. Let's do it like that. So 6,500 takes you up here, which is 6,500, which is about 12,443. 12,000. Double click on this. 12,443. Somewhere here. And then we have the slide, which is again 6,000. 6,000, which is here. There we go, around here. So 10,256, somewhere here. So now we have our strategy. This is the pattern, and you will find these pattern on many of the different time frames. What I prefer though, I personally prefer to trade this pattern on something like a 4-hour chart. A 4-hour chart like this is okay. Right now, because of COVID-19 and all of this, the markets move much faster than usual, okay? And what happens here is that it's okay to use a 4-hour chart. Sometimes though, the market goes super quiet and we would need to use like a daily chart. Now, this is just one pattern, but that pattern, you can see it in many different markets all the time. You can find them even in smaller sections if you wanted to. And the possibilities here are endless. The problem with this though, if you go here into the 5-minute, like right now your USD is coming up and we're up with about 117 points or so. And what can happen here is that what if President Trump says something? He's like, we're gonna do this with the Chinese, or I'm gonna do this if I get reelected. This can be much lower or much higher. So you can have patterns in the very short term that will break out, but they're not really gonna make you any money because they just crawl back into the oral range. So what's the strategy here then? Again, I like patterns on the 4-hour, that's good, and also patterns on the daily chart. No, most of the time, if we can get something like a pattern that is at least a week or two old, then that's good, especially now when it's COVID-19. Otherwise, when it's like normal, when it's less aggressive, 4-week patterns are good. That means as well is that as well, I don't necessarily focus myself. I don't necessarily focus on just Euro USD or the Nasdaq 100. In fact, I take a look at all the markets in the list, and I would just look for a pattern there. So every Sunday or so, I would look at everything, and maybe that Sunday I found 2 things. Like we have the Nasdaq 100, that's one pattern. That's perfectly fine to trade. And then maybe I'm sure we can find 2, 3 other things. And then I would just wait for those patterns to trade. And it's actually quite straightforward. You don't have to be on looking all the time, but you can right click and then on the trading, you can add an alert. So you can add alerts. If I click there, if the price goes up, it's going to give me a little notification. All right, let's close this. All right, so on the demo trading today, very busy day. We made $142 trading here, 142 pounds trading the market today. Okay, good. We're gonna wrap things up. If you have any questions, just put them in the chat box now. Again, as I said before, we have this, so you could create, you can have a meeting with me if you wish, where we can just put a little 15-minute thing. I will reach out to you, ask about your phone number, and what else? You have the demo account as well. I'll put the link for that. The only thing I didn't share with you is the pages to the educational content. So for example, this one here, this is for the premium course. If you want to learn more about that, that's the one I share. I cover more patterns in that course, and I cover how I manage with my stop loss, which I didn't mention. And this is also a bit more about the coaching as well. Okay, good guys. It looks like I have no questions, which is all good. We're gonna wrap things up. If you do have any questions for me, just let me know. As well, check out my Twitter account, Twitter handle. Follow me on Twitter, please. On Twitter, if I publish content, you will find them there. So for example, oh, look at that. This is interesting. So this is the dollar versus the Japanese yen. And this is a bit of a rectangle. So the market was capped by these 2 highs since August, capped by these 2 highs and these 3 lows. And the difference between high and low gives you the target. So Aussie dollar yen should be able to go to maybe 103.29 as long as trade below something like 106. Now what I've done here in the past is that actually in the morning updates I do for AtFX, I tell people that people would probably sell here for this to go down, which indeed they did. And that takes us to the last, actually takes us to the last thing, which is the AtFX YouTube page. And I'm gonna send you the link on that for more videos and more education. So that is this. So a few times per week, I do a few videos, like crude oil, NASDAQ, have like gold here, a few things actually. We do some other things as well, special videos, trading education and things like that. And you have that here as well. If you do decide that you want to open an account with AtFX, then and you have no trading experience, you never had any account with any other broker, then please check the video I just sent to you. Why? Because nowadays you can't just have no experience. You can have no experience, but you need to know the basics. You need to know what being long, being short is. You need to know a bit about the margin, which I talked about. You need to know a bit of a stop loss and take profit orders. All of these things we just covered here today, but it's always good to check out that course or that video I sent to you, because when you open accounts with a broker like AtFX, they have to make sure that you know the basics before they allow you to open accounts. If you have traded with other brokers, usually, I'm not sure about AtFX, but other brokers don't ask questions then. Or if you have experience within, if you work within financial industries, they usually don't ask you questions. But if you have a different profession, then they will ask you. And if you do not pass the questions, and they're very difficult, but if you don't pass them, you might need to wait 30 days before you can apply again. Okay, good. We're gonna wrap things up. If you do have any questions for me, as always, you have my email and you have all the other links. I hope to see you guys soon. Thank you, and bye-bye.